Okay. Hello, everyone. This is Rangadad. This is not financial advice. This is just the way I'm looking at the market. Wouldn't normally do a Saturday morning one, but I'm in here doing some work anyway. So figured, given everything that's gone on in the last day or so, it's worth an update. Yeah, very interesting daily candle so far. Where to from here? Well, kind of come back up into this liquidity zone here, but do I think this is a sign that we're going to go back in this range straight away? No, not at all. I think it's very interesting that the value area high is just at where the well, I actually consider this as the breakout. To be honest, that's where sort of most of the support was. But we do have pretty critical level just above us as well. And why I'm pointing that out is there is a ton of liquidity between here and there. And what I wanted to show you is what happened. This is a pretty good example of what I would expect to happen. Broken below the 200 EMA, significant drop through this range, cleaned up a lot of liquidity, swept the low here, but it bounced same day candle, and that candle is actually the percentage drop on that candle on that daily 7.37% is actually really close to what we just had, or what we're having today, assuming it stays like it is. So why I'm pointing this out is whenever we see a big wick to the downside on a high volume candle on the daily, and I've been looking at this and capitalizing on this for years, like literally, it was around here that I first started, because like I started my trading journey actually earlier than what this chart goes back, 2019 sort of area. And it wasn't really until this area here that I thought, okay, there's something going on with this sort of setup. So that's when I first noticed that, and I went back and checked it on charts to go back further, but typically if you get a big wick to the downside on a daily candle on volume, it will eventually come back to the bottom of that candle, right? And typically that is a pretty good buying opportunity. And look, this setup here is actually really similar to what we're seeing at the moment. So we entered into this range here and we had some ups and downs and all arounds. We broke that range at that level there, which is actually the current most traded zone, which is really interesting for our current range. I only just noticed that. Shit. So we're in that range for 99 days. Okay. 99 days, call it 100 with the day that broke. Then after we actually broke and got this big candle with the wick to the downside, it was another 69 days before we actually broke above that 200 EMA. Another couple of days before we actually retested and confirmed it, and then went back up to new all-time highs. But during this period, and you can see here, straight after this big daily drop, we actually came back up almost to the top of that vector candle, but we retested the 200 EMA and came all the way back down. Now, if you looked at that candle, it might not have gone straight up to there and then back down. It's probably gone down first and then come back up, just to suck in a few people thinking it's going to go back down. So realistically, we're probably going to be in a sideways range for quite a while. And I think the liquidity that's in the overall market would suggest the same thing. Like, as I said the other day, there just isn't any retail interest in the market. Even institutions are risk off at the moment by the look of it. We've just got to be really careful. Don't expect this thing to go back up into the range and go to new all-time highs. There are some things that could make that happen, but it's not necessarily going to. So realistically, there's probably another 2 months or so in this region. What held this one up was this structure here, right? And that was sort of the top of that zone there, and the bottom was, right at the bottom of that retrace there. So interesting to always look left and see what sort of structure you got. So taking us back over, excuse me. Actually, we'll see the same thing here. Big wicks to the downside tend to get recovered. Doesn't always happen straight away, but it happens. Okay, and sometimes it even breaks through to lower lows. Again, big wick to the downside. This one here didn't have a big wick to the downside, in which case that tends to signify continuation of the move, like same here. No wick to the downside. Yes, we got some retracement the next day, but eventually it rolled over. Big wick to the downside, got recovered, actually continuation through it. But that was the FTX debacle. So, big wick to the downside, it kind of got recovered the next day and broke above. If we get that, happy days, it might be a bear trap and, breaks out, all good. Some of this crap. Same here, big wick to the downside under the 200 EMA, retested the 200 EMA, failed it, actually retested the 50 EMA in that case, but we basically reclaimed that vector candle, reclaimed the wick. Not always perfect, but that's the general sentiment you get after that sort of drop and a range break to the downside. It takes a while to climb the wall of worry, as they say. Same thing can happen to the upside as well. Big wick to the upside, expect continuation. Okay. Big wick to the downside. Didn't happen straight away. It actually continued up, but eventually we came back and reclaimed it. Same thing here. So that is something that really we need to keep in mind when you're looking at where to buy and trying to avoid FOMO. Realistically, the buying point to confirm the Bitcoin's actually going higher is likely to be around 63, 64K. If you want to get in earlier, look for increases in this indicator. So look for this sort of signal here where you've got the bluish candle or light green, whatever that color is, above the green moving average there. You got green on these other indicators as well. That's not a bad time to buy. You'll still get retracement, so watch out for leverage, but not a bad time to buy. So we haven't seen any of that still. This is very much still a downside posturing. And we haven't really hit any key levels. As you see, this here is a reasonably critical level for us. There was a decent amount of volume traded in here. When you compare that to, let's drag that out. When you compare it to the amount traded in here, not nearly as much. So this will probably provide some temporary support at some stage in the next week or two, I would think. But, and look, to be honest with you, it could actually provide decent support. Potentially that 48K, 49K mark, which is kind of the bottom of this range. Well, it's very much the bottom of the range, but it's also the top of this candle here. That's potentially going to be your support point, and everyone's going to be calling for this 42, 43. And look, I have said that there's a very much a chance that it goes in back into this range, but at the same time, there's not a lot of vector candle recovery in that point. There's a big one here, but again, there has to be something really wrong with markets in general, which could happen if for us to see those sort of numbers. So realistically, I think this is going to be a very interesting level. I think that's probably going to be the bottom over the next few months, because I think there's too much interest in it. Like there's not a lot. There's no retail interest in here at the moment. There's nowhere near the liquidity that you have in a proper bull run, but I think there's enough interest, and federal banks and stuff are starting to look at buying Bitcoin, and countries are looking to get into it as well, that there is a potential that this area here becomes a macro low somewhere in that region. And we haven't hit that yet. This is kind of a no man's land spot to stop. And it's probably just because there wasn't enough interest there to keep going. The sweep to the upside here would have just wiped out so much liquidity, would have gobbled it up. Let's have a quick look at the liquidation points. 3-day. So not a huge amount, but I've actually been using this one a bit more. So a lot of interest coming in down below now. And we've actually swept a lot of the stuff that we were talking about yesterday to the upside. So yeah, I can't see them leaving this there. There's a lot of interest, a lot of orders down below. Okay. That, to me, still a lot more further up, but Bitcoin needs a hell of a lot of money to come into it to push these sort of levels again, I think. Can it be done? Yeah, but the charts would suggest that that's not going to be the case. $2.41 billion worth of longs could be liquidated down to 52K. More, yeah, 2.5. That's pretty significant. We do still have a lot to the upside, and I'll sort of, where are we? So 58,298. is the level that I've indicated, 58,298. So somewhere around here, wouldn't surprise me if we go to that first or at some stage in the next day or two. But as you saw it at the start there, it doesn't have to go there straight away. We can still go down a bit first and then sweep it. But I would expect this to be sort of the top of the range for a little bit. Yeah, somewhere around there. Doesn't really show us where it's going, but it kind of provides a bit of confluence with the expectations that I just went through. Fear and greed's pretty low as well, so it's a 29 read at the moment. So yeah, that's, and look, people are calling all sorts of things, buy the dip. This is a fake out. This is Germany that's doing this, or it's Mount Gox or whatever. It doesn't matter. Bitcoin had fuck all interest in it for over a month. Like, liquidity is so low. There's no one buying at these highs. There's a lot more interest in it down here, and the market goes to where the interest is. If there's not enough interest to push it to new all-time highs, the market isn't going to do it. And when I sort of realized that retail wasn't involved, you just get, well, I was getting a feeling that we were topping. I think actually I posted on Facebook somewhere around here that this was not the time to buy Bitcoin, just as a warning to my friends, who most of them aren't in crypto anyway. But yeah, definitely don't buy after a big ass run like that. But at the same time, if you're a DCA type person, you're looking to buy some Bitcoin, somewhere around the bottom of this wick is probably going to be a pretty good long-term buy and hold position. Like, I bet people at 71K were thinking, geez, I wish I had bought more Bitcoin at 53K. That's the sort of mentality you got to have, is you got to try and be a little bit counter to the market. Try and recognize your emotions for FOMO and then do the opposite in many cases. So stochastic momentum still to the downside, still no signals on the daily here, which is obvious. It's not going to signal on a red day like that. But let's go down to the 4-hour. 4-hour still doesn't have anything signaling. That's pretty good retrace and a reclaim of that vector candle. Still haven't hit any of the decent moving averages though on the way down. So 1 hour, I mean, 1 hour's looking up. Potentially come into the 50 EMA on the 1 hour, which is 57,206-ish, which would be a full reclaim of this vector here. But you do have another vector up here, which is that resistance level that I was talking about, which is the daily 200 EMA. So something to be mindful of. Stochastic momentum has rolled over here, but it's still in the bullish control zone on the 1 hour. BTC longs, people are still buying. And this is something you will see. These guys will keep buying and just keep buying and keep buying and keep buying. We're still at levels that are pretty low. Like, this was this is what they were doing on the on the run down from the all-time highs, right? So they're just buying a couple of sells, liquidations, buying, liquidations, buying, buying, some taking profit, and then buying as it goes down. And these guys here had some conviction, hey, because they just kept buying all through this region. And that's kind of what you want to see before we're hitting the lows, in my opinion. I mean, this was a massive run up, and these guys were holding for so long. I thought they were never going to friggin' sell, to be honest. This was kind of a good indicator to be using up until this point. It gave me nothing through this whole period, apart from the fact they were still holding. But then obviously they start to sell as price actually starts to go up and they start to get into profit. The fact that they've started buying again doesn't really tell us too much, but if they really start to accelerate, then the bottom's probably pretty close. They still didn't pick the proper bottom though. They thought that was it, and then they just held. How long is that? That first period is nearly a year there. Most of them were holding for 530 days. That's pretty fucking long. Pretty good commitment. So, yeah, definitely don't think we've hit the lows yet, though. What time? Okay, that's the 1 hour. Let's try and quick look at the 15-minute. 15-minute looks like it might be finding a bit of resistance here. We have hit this level. If we break above that, next stop would be probably up into 58.4, which is kind of in confluence with the daily 200 moving average. Is it going to do that? Possibly. It's not looking super healthy, but a bit of buying interest off that 50 EMA there. So Bollinger is contracting there though, so I have to wait and see which way it breaks. 200 EMA is pretty close. You would kind of expect it to get up into this supply zone here, especially from this level. What would that be? 57,260. Yeah, okay. On the 5-minute, it's kind of interesting in that we've hit a value area for this kind of drop. Looks like it's rejecting off that. So maybe it's collected enough here, but there is a big vector wick to the upside there. We are above the smooth Heikin-Ashi as well, so the trend is kind of bullish at the moment, as you can see on the shorter time frames. It's whether we keep going up to retest that 58-ish mark or not. This is kind of forming a distribution pattern in my eyes at the moment, but I wouldn't get too bearish in the short term until we clear the 200 EMA on the 5-minute. It has left some pretty obvious wicks here and some vector candles that aren't fully recovered, but it did a pretty good job down here of sucking in some liquidity. I actually took a manual trade last night, and fucking stupid trade, but got stopped out hard on that one. Never trade when you're super tired and late at night and you can't watch the fucking thing. That's when I lose money the most, when I'm putting manual trades on. Do stupid shit at night. This was obviously a pretty bad buying point for the bot. It was actually really unfortunate for those that are looking at or using Tradie or bot. This short here, we didn't actually, I don't think on my account it hit TP2. Technically, it should have hit TP2 in here. It hit TP1 in the first candle. It should have hit TP2 on this wick here. But I think slippage or something from Wonder Trading actually didn't trigger it. But because the trading view indicator thought it should have been triggered, our stop loss got moved up to basically a bit above break even. And so we actually got stopped out on this candle. If that hadn't been stopped out, we would have actually caught a pretty decent chunk of this candle, and that short wouldn't have opened because our trade would have finished on this candle and it doesn't open the trade on the next one. So that was unfortunate. But yeah, we've still got this wick down here, 53 as well, but I wouldn't expect that to hold for too long. But it really depends. Like the next couple of days, if not the next month, are probably going to be pretty choppy. You know, we're going to make that sideways and down move, I would think, but at some stage we will recover this, potentially go a little bit lower. Whether it happens from here or not, I doubt it. I think we're going to get back up into this region here. The 800 EMA on the 5 minute, 57 800. That's going to be a pretty good level for another downside move. But at the same time, I thought the other day, I thought here we were actually going to get back up into that 800 as well. I was expecting a bit more of a bounce before we actually ditched it, but it pretty well just didn't want to hold that 200 EMA for very long. Daily 200 EMA. So yeah, that was another good fake out for the bot. So it's going to be interesting because the market will be a bit skittish. You know, it doesn't. This most of the moves here are sort of big. That freaking candle there, that was on the jobs report. I was awake at that point, and obviously we had the long open, which was still a profitable trade for the most part. I think it hit TP2 in that candle. But yeah, that was a big volume candle, like 7,000 Bitcoin on Bybit alone. Yeah, 13,000 on that big drop there. So a little surprised we didn't actually follow through more on that. But the market seems to think that higher unemployment means lower rates, which means good things for stocks. Seems to be the case anyway. Looks like we are trying for higher at the moment. Doesn't look interested in coming back down to this wick yet. Which is interesting, but we'll see. Might be a low liquidity weekend, I think, after all this, after a week of Bitcoin just completely dumping. I think it's going to be a reasonably quiet weekend. But at the same time, Asia seems to like selling on quiet days, so be careful. Take profits at good levels and as frequently as possible, I think. And yeah, hopefully the bot doesn't get faked out too much. I think that's fair. I'll do a quick rundown of the markets. Sorry. Ooh, 5-minute NASDAQ looks like it's rolling over with a double top there. That's finished the trading day. That's an interesting finish to the day. Whoa, yeah, okay. And you get that on at the end of the day on the interesting aftermarket's down pretty hard. Well, for this market anyway. Looking like a rollover, but God, you just be hard pressed to short the NASDAQ or the SPY at the moment. Pretty hard pressed to short this sort of market when it's doing stuff like that on the 5-minute. But I was looking at the 5-minute then. Let's go into, let's change it back so I don't screw myself over. Sorry, yeah, okay. So not a super positive day. Sorry, it was a super positive day. This is the hourly. Fucking hell. Okay. Yeah. This is hopefully going to be part of the blow off top. I say hopefully because I want cheaper Bitcoin to buy in at. But where this stops, who knows? We just go to the monthly. That was a super bullish monthly on the NASDAQ. Let's look at an extension. Probably. Don't use these often enough. Sorry. One. I just want to do. Just going to use the retracement one. So we're just coming into the on this particular drop breakout of that. Kind of retested it almost, and we're climbing. Wouldn't expect this to go much past bloody 2236 to be honest, but God knows. The reaction at the 618 extension will be interesting. If we blow through that, then yeah, you're looking at 24-ish in a few months, I would think. And that could be the lead up to the election that I've been talking about. Like we kind of expected this just based on the history of what happens in election years. That correction was probably lower than what we thought would happen around that time based on the history, but we are also in a very overinflated market. We are late stage bull run type market here. Both timing wise and extension wise, this has definitely been a pretty big one. All right, I'll just get rid of that. Let's have a quick look The interesting thing is RSP has hit new all-time highs in the last couple of months, but it has not recently, so it's just sideways. And again, it's just nothing in it really. IWM, actually, let's do equal weighted Nasdaq, is actually going up with the rest of it. IWM flat. IWM is not where you want to be playing at the moment, I wouldn't think. Maybe some individual stocks within this range, but yeah, it's not a ticker that you'd be trading much. XLI is still dropping, really. It's still in that general downward trend. We do have a little bit of liquidity pump, global liquidity pump in the market, but still at a pretty low level. XLY, XLP has actually had a bit of a down day. Still quite high up there. Whether it finds resistance at this level, and if that starts dropping, then you would expect the market to sort of follow suit. But no real confirmed change of trend there. DJI versus gold. So again, this is generally when this is dropping and the market's going up, it's kind of a signal that the general market isn't healthy, and we are potentially just in that late phase, blow off top type bubble. Dixie is down, so we didn't find support on that 50. Next stop for Dixie is probably the 104 mark. Needs to find some support there, I would think. Coming off this sort of trend line here. It's not a great trend. Probably draw it somewhere through here. Needs to find support there. If we break below that, then Dixie's going down pretty hard, I would think, which will probably happen if through earnings season, which is coming up starting next week. If earnings season shows that companies aren't making as much money, the economy's weak, then expect stocks to start dropping pretty hard, and the rates and the bond market will probably drop pretty hard, expecting rate cuts as a result. The market is forward looking, don't forget. So, and if if interest rates drop, then the dollar tends to drop with it, just because basically people don't want to put their money into dollars because they're not getting the return on it. Okay? In which case, gold will probably have a decent run. Gold and silver, most of the materials, copper, all that sort of stuff will probably have a decent run. And you'll start to find a bit of support in things like the IWM. So the Russell 2000, the smaller cap stocks, will probably, after an initial sell, we'll probably find a decent bottom, but we'll keep an eye on that. VIX has jumped a little bit, which is, in line with sort of the expectation that we may see a bit of a drop soon. TLT, so treasuries breaks out as well. That will be a good sign that market's going to go down a bit. It is kind of going counter to what I would expect at the moment, but So this is the fact this is going up and the market's going up, and you're kind of expecting some stage the opposite to happen on the general market. HYG high yield is actually going up a little bit, still in this range though. So skew is going up as well. So again, skew has been a pretty good indicator that there is support there for the market still. So SPY's up, Nasdaq's up. You know, what else can you really do? Skew's been a skew doesn't always give you much of a guide, but in these sort of markets it can, and it has been a pretty good indicator so far. It does look like it's kind of starting to weaken there though. So if we do get some skew crush, then expect the market to be coming down pretty soon after that. Copper had a big day, very big day. Didn't come down to our 200. I was sure that was going to come down there, but it's probably hit 100 EMA in there, I would think. Let's just have a quick look. Even got below that. Bit of a fake out there on copper. Came into a bit of a region here, but I would have expected it to get a little bit lower, at least there. So interesting recovery of this vector here. On big volume though, so copper's looking pretty good. If we break above this level, like if it has another good day next week, I'd actually be expecting it to hit pretty close to the all-time high. Well, I don't know if that's an all-time high, but pretty close to that high anyway. Up around the $5 mark, which again kind of supports the narrative that the market's okay and stocks are going to go up, but just be careful, I guess. It could be a bit of a fake out, and in stagflation, materials do commonly perform best out of most of the market. So we are getting into the extended zone on stochastic momentum, but as you can see, copper can hold that for a while on a longer term run. So yeah, interesting little breakout. Gold looks set to test the highs again. It's a good breakout. Same with silver. Wouldn't necessarily call it a breakout, but you know, if we get a decent day the next day, it should keep going for a bit. Good little double bottom here, forming one of our favorite patterns, the W pattern. So look for this to go basically do something like that. That would be a pretty good buying opportunity in here, potentially. Got to look at the lower time frames and look at the price action, I guess. But Japanese yen looks like it's finding some support here. So whether it's the central bank doing that or not, who knows? But it looks like they're starting to intervene. Could just be the weakness in the US dollar. Whether the weakness in the US dollar is caused by the Japanese, I don't really care. But it's just of interest because Euro US dollar, Euro makes up most of the Dixie. It could just be strength in the Euro. That'll be an interesting level there for the Euro, around that 800 EMA. provided a fair bit of resistance in the past. You know, 1, 2, 3 failed breakouts, 4, 5. Yeah, that will be an interesting level. But a decent breakout can lead to quite a bit of upside. So it's actually going to be one to watch. That might give you a bit more of an indication on where US dollar might go. If we break that level, maybe a retest at this sort of level, you'd be expecting it to go up into that 1.11, which that's 28th of December 23. Would be, yeah, it was this macro low on the US dollar. So that's an interesting one to look out for. Potentially the low, yeah, it could come all the way back down into here, to be honest. Should be a fair bit of support for the US dollar in that sort of region there. That's just an interesting little bit of confluence there. So I might watch that one fairly closely. So 2-year, 10-year is struggling. Yeah, I'm still keen. This is the level we want it to get to. I'm not going to get too worried until we get through that level. Then we'll be expecting a decent market correction. So until then, business as usual. This doesn't really tell us too much, but we'll keep an eye on it. Percentage of stocks above the 50-day moving average is still low, still in this downtrend, macro downtrend. Still not into any particular regions where it would suggest a good buying opportunity for the market. That's sort of going to be around the 26 level. We want to see something around there. And then maybe into this sort of level here. Somewhere between here is typically a pretty good buying opportunity. If we do get a major correction, back down to that 10 level. If we hit 10 on that, then it's, oh, and what's that? That's close to zero. Literally 2% of stocks during the COVID crash were above their 50-day moving average. Less than 2. Don't know that that's coming yet, but yeah. 10's a pretty good buying opportunity. It can go lower. Even that 15 mark has been a pretty good opportunity throughout history. Let's go. What's that? 2011. Geez, that got low too. And that's 2008. What's that level? Yeah, back down into the 2s. So realistically, you can actually get a good idea of the turnaround just by looking for bounces on this particular indicator, but just know that it will lag, obviously. Do you buy here or do you buy on this green candle? That's not a great green candle anyway, but yeah. Look for some engulfing and some signs of proper turnaround on this indicator for trying to pick market bottoms. I think it's a pretty solid one. Potentially even wait till this this indicator fires off as well, although it didn't really pick this bottom very well. Anyway, Mag 7 smashing it out of the park at the moment. No real signs of slowing down there. So until further notice, big guys go up. Oil's struggling to get through this 800 EMA. So again, oil coming down would kind of support the market for longer. So just be mindful of that. I would be expecting a little bit of support for oil around that 79 mark though. Potentially down in, around 79. That'll be an interesting point. That's about it, I think. So to summarize all that, hang on. For Josh was probably the only one watching this. Let's have a quick look at the Brazilian real. That's a pretty good recovery there. And if the US dollar does keep sliding, then I would expect this to come back up into the probably into the 19-cent mark, really, at least. I wouldn't say it's particularly strong still. It's got a long way to go before it breaks into an uptrend, put it that way. Bitcoin dominance is up slightly. ETH's testing the 200. Have a quick look. Sol is interesting. Sol has really bucked the trend in the market at the moment. So whether that's just people buying up in anticipation there might be some ETF news or something, I don't know, but it's found a lot of support at the bottom of this range. One thing to watch on Sol though, yes, that is support, but at the same time, we're sort of in a bit of a downtrend here. Big old wedge forming. So it could easily come back up into these sort of levels, the 165, 170 mark. If we get a breakout through that and a retest, then that's a pretty good sign that you're going to get a pretty decent run. You probably hit all-time highs, to be honest, based on that. But a lot of support, a lot of wicks to the downside on it, but Sol definitely seems to be the flavour for the bigger guys at the moment. Interesting to see what. Oh, yeah, okay. Stochastic's still headed down. Yeah, it's in a real battle at the moment. People trying to prop up their bags. Raoul Pal's probably the one buying a shit ton of it at the moment. He loves it. The rest of them, though, nobody seems to like most of the cryptos. Quant's getting a bit of support. Interesting. Do like Quant as a project, as an idea, but she's struggling. Fair bit of volume in this area here, I would think. So it makes sense for it to go sideways and potentially find some support here. Decimated. Yeah. Doge. How's Doge? Whoa. Interesting. Can nearly tap that 800 EMA and it's nearly recovered all this vector candle here. So Doge might be almost finished its run. Like in terms of that was pretty close to what it might find as a low. You just look at, I mean, this range, depending on where you take the range from, but if you took it from these sort of levels here, which would kind of make sense. You know, That's not a bad level. Doge might have even signaled early on us. Anyway, I wouldn't expect the market to leave that sort of candle on the daily. It's going to recover most, if not all of that, and test this 800. Not financial advice or anything. It could come back up here first, but you know, that's an interesting chart. Finding a lot of buyers around that level. Phantom. Oh, Dot was another interesting one. It's finding plenty of support as well, but that's looking like a pretty nasty head and shoulders too. There's your neckline, basically. Not getting too accurate on it. So let's call that your extension. If that plays out, Dot potentially comes back down to the 350 mark, 360 mark, something around there. Just something to keep in mind. Not a huge fan of head and shoulders though. They get broken quite a bit in my experience on cryptos. Depends on the overall market. That's interesting. What have I got? For some reason I actually had that level in as support. Huh. Where the fuck did I get that from? Anyway, don't know when I did that, but wish I had looked at this chart yesterday. Yeah, all right. I think that's about it. Expect some sideways and potentially down for the next couple of months, really. If we do break back into the range and sort of retest the bottom of the range, then yep, we're going up. No worries. But it's not shaping up to be that way at the moment. Short-term bounces will probably be met by some reasonable selling demand. And then obviously once we do get down to this level, just be careful because you could get some fake outs here. People are already calling for 39k and 42k and stuff like that. And look, if we break this level, yeah, 42k is definitely potential. But yeah, there's a lot of things at play that haven't been at play throughout the history of Bitcoin so far, like ETFs and governments getting involved and all that sort of shit. So just be careful with those sort of assumptions. Try and buy when it's cheap and hold on for dear life a bit, or just trade it in shorter time frames. Okay.